let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. How are you? Good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you for being here. Thank you for participating. Thank you for asking for questions. And thank you for the hard work you do every day to try to succeed as a foreign exchange trader. So today we'll cover technical analysis pretty easily. I don't think we'll have time for fundies or anything. But let's do this. I'll do some dollar pairs, I'll do some yen pairs, I'll do some gold, I'll do some oil, we'll laugh, we'll cry, we'll hug, and then we'll move on. So anyways, thank you for everything that you do. If you're new to these webinars, I do them 7:30 in the morning generally, but this time of year, it's sort of a toss-up. I do them when I can, so I apologize for that, but then again, thank you for your flexibility. What else? If you like the chart templates I'm going to use today, I will give them to you for free. The link to the charts are in the description below the video. Comments and likes are appreciated. Just make sure you visit TradersWay.com, download a demo account, install those chart templates, and you will have what I have when I trade. You should be golden. Boom. Does anyone have any coffee? Please. It's not an addiction. It's not an addiction. Totally not. All right. So, you know what? And I'm having trouble even seeing my screen. Hang on. Whoa. I don't know where my other pair is, but okay. Well, I've got glasses of water. That's going to be helpful. So, hello from Cambridge University. Cambridge, Massachusetts. A little private school, Harvard. Maybe you've heard of it. They are keeping us busy. Holy smokes. So, hope you're keeping yourself busy and refining your expertise in this world. Okay, I don't really want to start with the Aussie yen. You can see it didn't really give you a day trade, so not much to talk about there. Let's instead start with gold and oil because that gives me a better sense of macroeconomics. Do you guys trade Bitcoin? Did you see that yesterday? It went down 10%, up 10%, down 10% in an hour. Oh, that is so good. So, what was that all about, huh? That's some crazy volatility, and not in a good way. All right, so yeah, this is not gold, but this is, let's have a game with this. Gold was, or USD Swiss franc was slightly up for a while and slightly down for a while. Let's now take a look at gold. Slightly down for a while, now slightly up. Isn't that interesting? Yeah, about Bitcoin? Yeah. No, I did not. I don't have one. Sorry, Peter. Okay. So, isn't that interesting? And I swear to you, I didn't. Obviously, you can tell I haven't prepared. But isn't that interesting that you can have a correlation that strong, where you can look at USD Swiss franc and have it a very good idea what gold's doing. Maybe that's something that you work on this summer. Do some research on currency correlations and intermarket correlations. Learn what they are, learn why they happen. Maybe poke around, see if there's some seasonality to it. How do these correlations change in risk-on scenarios versus risk-off scenarios? So I'll give you like a fun little correlation thing to think about. 10 years ago when the Fed cut the interest rates, the US dollar skyrocketed in value. It went up in value very, very, very significantly. So 10 years ago when the Fed cut interest rates, the dollar became the most powerful currency in the world. Now when the Fed is talking about cutting interest rates, the US dollar gets weak. It loses value. It's one of the weakest currencies in the world. Why? That's there's your paper. Write a 10-page paper. Cite your sources. Use MLA standards. And see if you can answer that question. I mean, there you go. I mean, there's some college level research you should do. And I think that would make you a really good trader. But anyways, I diverge. But that's a legitimate thing to maybe ponder over the summer. If you could do that, it's a very good start. Anyways, what do we have here? Well, even though we had this big move, a week ago or something, I've really lost time. The last 3 days, I swear to you, seems like 2 weeks. I'm on day 4, and this is ridiculous already. So anyway, so how long ago was that? That was only a week ago. Big move in June, and then what do we expect? Consolidation, right? Even though there's this big move, I don't really necessarily believe this has to keep going up. Okay? That's right, Peter. Yeah, but the question is why? Right? You know, it's like, why did the person fall down? Oh, he stopped using his legs. Yeah, that's a symptom, but not necessarily a cause, right? That's correlation, but not causation. Most people tend to fall down when they stop using their legs. Okay, why? Well, in this case, the bus hitting him was the actual cause, right? What was the bus? So anyways, so I have this in the back of my mind, and you have to be open-minded as well to say it doesn't have to happen. It's only a hypothesis. I could be completely wrong. But the thought here is I don't really think these things are going to trend. I've seen so many years past where you start with a big bang and you get sideways. So I'm always looking this time of year for evidence of that because I don't want to get trapped. Like, here's what a lot of people could do. They buy, right? Well, they bought it here, made a lot of money, right? Then they bought the pullback, made a lot of money. And then what do you think they're going to do next? They're going to buy the pullback, don't make money. They're going to buy the pullback, don't make money. Buy the pullback, don't make money. And they give all this profit back to the market. So I'm going in like, oh, all right. What is the evidence? Like, if you were a bull, are you supposed to be buying here? Morning, RC. Are you supposed to be buying here? No, that's where you sell. How about weekly R1? Is that a good place to buy? No, that's not a good place to buy. This was an okay place to buy right here. That happened on Thursday, maybe Friday, right? So now what? Well, it's dangerous, but to me, it's a terrible place to buy. You have a little bit of price action here, but think about it this way. The book I now wrote, 12 years ago or something. In the chapter of pivot points, do I talk about, wait for it to go to R1 and then come back down to M3 and then buy at M3? No. It's not anywhere in the book. So I look at that and I'm like, well, the only thing that's in the book is if this is the top, this is the projected bottom. And the funny thing is, you can see weeks ago I already highlighted this area well before those pivots were created. So you see what I mean? Like, I don't know if that's right. I mean, this could just pop, okay? But I'm very wary. It's going to have to prove to me, it's going to have to convince me that I should invest. I don't think you often trade that way, where you have a certain set of standards and the market has to prove to you that it meets those standards. I don't know if you trade that way. Maybe you should. Food for thought. Oh my God, that is so good. Oh. All right. So there's Goldie. So a little hesitation on the move, which makes sense actually. Oops. Goldie. Let's take a look at Oily. Nice recovery. Nice. Is there a trend? Is there a move? This is not just like we showed you on gold. This is not a good weekly setup, and it's not a good monthly setup. But I did offer, was it at NFB or maybe before? No, not NFB. Was it? It was it NFB? Let's see. When was the big move? Was it? So NFB would have been here, and then the Fed meeting here, right? I like to have a catalyst for a reversal. That's most ideal. But at some point, you might say to yourself, I want to buy this, but I got in late. This is too high. This is too high. What you need to do in this scenario, guys, if you're going to force yourself into a trade late, which I never recommend, but you know we all do it, but it's death. It's where you're going to lose money. The way to do it properly, right? Like, never do this, but if you're going to do it, never do this. But if you're going to do this, JL, then drop into your daily pivots. If you've taken the swing trading course on FX Bootcamp, you know how to do this, and you'll look at this and say, yeah, there's some trades. Yeah, it's not perfect, but you're forcing a very imperfect trade into a very imperfect market, so you're not going to get perfect entries. But you can see there's trades here. There's one there. There's one there. This was one you might have taken a shot on, but mediocre again. So just be careful. When you go into the summer and you sense that you are losing in volume and volatility, still do the same work. Identify your big levels of support and resistance, because they give you clues on where you're going. Where you are is generally irrelevant, right? If you have no path. So it's sort of like someone coming up to you like, hey, so what are you doing? You're like, nothing. Where are you going? Nowhere. Then where you are is irrelevant, right? So you still have to do the big picture stuff and say, well, I want crude to go up, but I think it's overpriced. That's a better answer than anything else. Oh, well, what is the right price, right? Now, if you consider yourself an advanced trader, then what you would end up doing is you'd be short-term short, long-term long. So actually, you'd be looking for trades like this the next few days, or the rest of the week, or part of next week, and somewhere get on a bigger trade like the weekly central. And that's the beginning, the bare minimum to get a bullish entry, right? So you could be short-term short, but long-term long. So let me summarize that. You should still identify big levels of support resistance, weekly pivots, monthly pivots, psychological levels, and such. But you might find that your best trades are day trades. Okay? Because when I'm looking at these bigger picture charts that we typically trade on, there isn't a trade. So ponder that for a second. When I look at the charts we typically use to create medium and long-term trade plans, the map of where we want to go, okay? We know where point B is and we know where point A is, okay? Or maybe we just know where point B is, but I don't know, whatever the analogy is. But here's the thing. I look at the charts, they don't look good. But that's expected. We totally knew that was going to happen. So now what do? Do those big picture analyses, try to figure out where we should be going, find your levels, find your prices, and then drop into like daily pivots and day trade. Day trade your way into sort of a weekly trade, if that makes sense. I hope it makes sense. Is there a chance? Well, first, there's a chance of everything, so you're going to have to rephrase that question. Okay, but the yen becoming weak? Yeah, well, yeah. So I'm a bull on macroeconomics. So I think the dollar should be weak. I think the yen should be weak. I think the Swissies should be weak. Now, of course, I could be wrong. Great. But at least I can analyze the charts to see if this is a good time to make investments based on that investment philosophy. Okay? So a weakening Japanese yen is a very good thing. So like we discussed yesterday, I'd probably be long euro yen when things look good, and then when the markets look bad, I'd probably be short pound yen. And I'm using the risk off sentiment of the market to put me into trades. Hey Joel. Good? Okay, good. Very good. I like you. You crazy. You got to get yourself together. Okay, euro dollar. Out of position, but let's do this. Out of position, but this is the play. Okay. I look at this and I think, well, no matter what, I cannot sell. Sam, I am. Okay. I cannot sell. Make some pips. I cannot sell if you give me tips. I cannot sell. I can't sell there, so I have a roll reversal. Cool. That's a plausible move. And then, of course, I'm looking at next week already, as you probably are too, and I'm thinking that. So this could do nothing for the next 2 days or just slowly accumulate a move. Cool. Okay. So I set you up with, trade plans here, long. I set you up with trade plans here, short. I set you up with trade plans long here. I told you to stop buying up here, and now maybe there's a roll reversal. Okay? So you got to pick your battles. Okay? Got to pick your battles. So there might be one here. Might be. Probably don't want to trade it on a 4-hour. You might want to set up a trade plan on a 15-minute chart. You might not want big pivots. You might want little pivots. Okay? It's all common sense. So if I wanted to get long, what would I do? Well, if I wanted to get long based on this roll reversal idea, that's just a strategy. I want to be long sort of in this zone. So I have to determine whether this move here is good enough. And if that is good enough, I might be buying now. If it drops a little lower, I might be buying then. And notice this has nothing to do with today. Why would you be planning today's trades now? Very dangerous to open a chart looking for a trade. Very, very amateur. All right. You got to get yourself together. Let's do some Aussie. This is one that was very, very weak and now is not very, very weak. Right on, Joel. Joel's got it. So there's a swing trade here. Okay, this is a swing trade, Friday front run. This is an S1, so that okay, this S1 predicts. It's not even on the chart, but way up here somewhere there's an R1. So we call this an inside month. But I believe I cautioned you on this, didn't I? I remember this now. The weekly target is here. There's a monthly issue here, and then there's a price action issue here. Yeah, be careful. How far away is R1? Oops. All right, so that's the biggest potential. But you know what? The way I see this, if we're going up to the monthly R1, I kind of see it as this is a great place to take profit, buy it back next week, hit here, and then get out. What do you think? Smell like a plan? I gotta move. I gotta move. Thank you, guys. Remember somebody yesterday said there's no trend in CAD yen? And I'm like, what? Well, how about now? I think it was a newer person. I can't remember now. But I'm like, what? So we were here yesterday, I guess, right? Or whatever. But yeah, there's a trend. Now imagine you couldn't identify a trend. Do you use the regression tool to identify it for you? Because remember, I showed him, I'm like, this is not my opinion, that's the math. Well, typically, Jason, it would stay weak as long as there's a central banking policy that creates the weakness. Or at least a sentiment where the market believes the central bank will have, create, or nurture a central policy that creates weakness. So let's talk about banks, Jason. You're in a bank, you're happy with it, but you're indifferent. You're not in love with the bank. It's just another bank. You put money in the vault. When you ask for it, they give it to you. Yeah, that's kind of what you expected, right? Okay, and it pays you 5%. Now there's a bank across the street. It's equally as nice. The location's the same. Service is about the same. You're like, yeah. And it's got a reputation where if you put money in it, they'll keep it safe. If you ask for it back, they'll give it to you. You're like, yeah, I'm just as good with that. I could have gone with that, but for whatever reason I didn't. So you're indifferent between the two. Then one day your bank says, we're not going to pay you 5% anymore. We're going to pay you 3%. How do you feel about that? Well, the bank across the street still pays 5%. And you expect them to pay 5% for the indefinite future, right? So what is a possible strategy how to handle this situation, Jason? You used to earn 5%, but now you earn 3%, and the bank across the street pays 5%. What do you do? If you have a liquid market, which means you're able to just leave your bank whenever you want. Right, I know, but what is your strategy, Jason? what would you assume the consumer behavior to be? Change banks. So you withdraw from your current bank. That means you're selling. Okay? And then you are putting that money in the other bank, which means you're buying. It's a currency trade. Okay? And that's what happens. So the currency of the first bank is weakening because people are withdrawing it. Okay? So that's what so when you're asking me like how long is the US dollar going to be weak? Well, first of all, how would I possibly know? Second of all, what information could I interpret to make such a decision? And to know that, I'm going to need to know why the dollar is weak to begin with. So I'd have to say, well, as long as people think the Fed's going to cut interest rates, the US dollar will be weak. It doesn't actually have to be as long as the Fed cuts interest rates. It's as long as people think the Fed is going to cut interest rates. Okay? Therefore, the money will leave and go somewhere else, and that creates a low value currency. Okay? My book, I think it's called Currency Magnets, the subchapter. Money magnets. Sorry, money magnets. Well, Roman says interest rates low, US dollar low, right? Well, is that true, Roman? Is the United States dollar a low interest currency? No, it's a high interest currency. Think about it. It's a high rate currency. It is. And we haven't even slashed interest rates yet, but it's low. So it's the perception that is much more important. This is why you need to learn macroeconomics. Because if you don't have a perception, then you can't figure out what the perception of other people are, and you're just following charts. Okay? Yeah. Hey, my pleasure. Hey, once again, I'm up till like 1:30 in the morning, and I'm up, I'm only getting like 4, maybe 5 hours sleep a day. Oh, by the way, my first examination was yesterday. I got 100%. Hundo P. Nice. Average was 70. Okay, yeah, trend here's a good one. RBA cut interest rates and the Aussie dollar is still going up. Why? Well, the interesting thing about why may have a lot to do with the United States than Australia. No, thank you guys. Thank you. That's what I'm here to do it, right? So, yeah. Oh, yeah, thank you. Roman says, because gold is high. Okay, yeah, that's definitely, it's not because, but that is a contributing factor. Sure. But why is gold high? Because of the US dollar. Okay? So you could follow it around. So I think the US dollar is a larger contributing factor than gold. Gold really is a symptom. Okay? So like if people didn't think the Fed was going to cut interest rates, then gold would not be going up in value. Okay? So, but it's true, the correlation between gold and Aussie dollar historically has been very strong. But it's not necessarily the causation. Sorry, I got to keep the eye on my time. I got to move. I got to move. I got to move. All right. Let's take a look at this. Okay. Nice setup. I appreciate the setup. This is a beautiful entry, and we just hit the target. So this one's done for this week. So if you're going to challenge the trend, like this is not trending. So what have I taught you? How long will this move sideways, this market? Okay. Roman says, not surprising investors to take a profit on BTC. Sure, but that doesn't give you a price. Okay, Roman? You're saying everything we've said so far today is accurate, but it doesn't tell you why. There has to be, and don't say, oh, some dude dropped some money somewhere or some bank did something. No. Price and time. Okay, price and time. Okay, because we're trying to get past generalities. We're trying to be specific, and we want to know the cause. Okay, and I mean, I'm picking on you, but in a good way, because everything you're saying is accurate, but I want you to get to the next level so you can sit with an investor and say why, but also you need to be able to predict the future, not explain the past, right? So for example, I look at this and my prediction of the future is that we don't actually break this high. Now we could and we may, but in this scenario, I say to myself, okay, I don't know if that's true, but I'm thinking ahead. And so the answer to the question, how long will it move sideways? Forever and ever and ever and ever and ever and ever and ever, this will move sideways for absolutely ever until it breaks. But the thing is, once it breaks, I move to the next step and I can say, okay, but I trade a breakout strategy at that point. So this is not trending per se. And we can identify that mathematically. Once again, I can do the actual math. I have the formulas, but luckily I don't have to make wheels for my car either. So I just use a tool. Channels is what I want. So I can say, well, from this day, or even this day if you want, okay, or even this day. Let's go from the far left. From this day to this day, what's the trend? Slightly down. What is the, now, and by the way, I'm not moving this up and down, does nothing. So I'm not influencing the slope, right? Y equals mx plus b, right? You guys know your slope formulas? So this, I'm not doing anything up and down. It doesn't do anything. I'm only moving sideways to sideways. So from this point, there's very little downtrend. From this point, there's a slight uptrend. From this point here, absolutely, totally sideways. But that's, I'm already doing that kind of for you. And you see what the math is doing? The math and the pivot points. Do you see they're just giving you standard deviation? Okay. Now, this is better than standard deviation. And I hate to go into math with you guys, and it's early, and I got to go, and maybe this is a tangent, but I'll leave you with this. Pivot points I find interesting because we're not interested in the mean. This is the mean. This is one standard deviation, and you just use the standard deviation formula for that. And this is one standard deviation of the mean. This is just as far away from the mean as that. But we're not interested in average. Okay? Average is not interesting to us. So we talked about the US dollar, for example, weakening, not based on a policy, but the assumption of a policy, right? Like a sentiment. Well, look at this central pivot. Let me do it in a different color. Look at this central pivot over that same period. It's not mean. It's not the average. It's a weighted average based on sentiment. Okay? And what this tells me is that there is a slight bullish bias to this. So even if you're looking at a downward sloping regression channel, which I drew just earlier by just adding some more data, so I added some more data points to the data set, and I get a slightly, over that period of time, negative slope, y equals mx plus b. However, I can also see by understanding the pivot points that on a longer basis isn't true, or I can change the data set to get a different answer. And that is that central pivot point tells me there's a slight actual upward bias. Okay? However, did we live up to that bias? And that bias currently says no. So now I'm looking at next month's central pivot, and it's actually slightly lower than this month's pivot, which tells me we didn't live up to the potential. But how did I describe the market to you back in May? I said the way I see June is it starts with a big rally, and then it comes back, and then we fizzle out and move sideways by the end of the Fed meeting, right? I mean, that's very specific, right? Up and down and then sideways. I didn't say down and then up and then sideways. And so now you can kind of see this where I look at this and I don't see the conviction of the market. So what I see is this. That might not happen, but that definitely could happen. And I have very sound reasons from experience, but also mathematically, right? And my experience with fundamentals and seasonality. We saw this coming, and I clearly articulated this in early May, in mid-May, in late May, in early June, in mid-June, and now here we are basically late June. It happened the way we said it would happen. Now, it doesn't always happen that way. The thing is we had a strategy and a plan, and we could identify if the market conditions were as we expected or if they were not as expected, and then make intelligent decisions on how to respond to that. Okay, I gotta go, guys. Thank you. Big hug. Thank you very much for being on my team. Thank you very much for being patient with me while I'm at school. Thank you for throwing every ounce of energy you have into becoming a better currency trader. And I'll see you when I see you. Thanks for being clients at Traders Way, huh? Cheers. I gotta go. Gotta go.